Hey everyone, welcome back to Corporate Decoder, the place where we take a peek under the hood of corporate America. And today we're diving into Upwork Inc., a platform that connects businesses with freelancers. And get this, Upwork decided to give themselves a little financial pat on the back with a new stock buyback program. Before we dive in, if you like getting these digestible breakdowns of complex financial news, make sure you're subscribed and join our Discord community linked in the description below. We talk all things finance there. Upwork Inc., a company that's all about connecting talent with opportunity, has announced a pretty significant move by their board of directors. They've authorized a big one, a buyback program worth up to $100 million. Now, what does that actually mean for you and me as investors, or even just people curious about how the business world works? Think of it like this: when a company buys back its own stock, it's essentially reducing the number of shares available out there in the market. They can do this in a few ways. They can buy shares directly from the stock market like any investor would. They can make deals privately to buy a chunk of shares at once, or they can use other methods. The key here is they have the freedom to do it when they think it's the right time and price. And get this buyback program doesn't have a hard end date. It's a flexible plan that can continue until Upwork decides to stop it, change it, or pause it for any reason. This gives them a lot of strategic wiggle room, but it's important to understand that this doesn't force Upwork to buy back a specific number of shares or spend the whole $100 million. It's more like giving them permission, a green light, if you will, to do so when they see fit based on how the market is doing and how the company itself is performing. It's a tool they can use to manage their capital. All the details about this announcement are included in a press release that's attached to this official filing. Think of these filings as the company's way of reporting important news to everyone. This particular press release is dated September 3rd, 2025, so that's when this decision was officially made public. This report is signed off by Erica Gessert, the Chief Financial Officer of Upwork. As the CFO, she's directly responsible for the company's financial health and strategic financial decisions like this stock buyback. Upwork's common stock is traded on the Nasdaq under the ticker symbol UTEDWCAD. If you've ever bought or looked into buying their stock, this is where you'd find it. So what does this stock buyback really signal? On one hand, it can be seen as a positive sign. It often indicates that management believes the company's stock is undervalued, meaning they think it's trading for less than it's really worth. By buying back shares, they are essentially investing in themselves. This can also boost the stock price because there are fewer shares available, which can increase earnings per share because the profits are spread across fewer outstanding shares. It shows confidence in their future business prospects. However, we also need to consider the flip side. A company using its cash for buybacks might have fewer resources for other things like research and development, expanding into new markets, or acquiring other businesses. It's a balancing act. Upwork is choosing to return value to shareholders directly through this buyback rather than reinvesting every single dollar back into growth initiatives at this particular moment. Now, thinking about Upwork's overall business model, they operate in the gig economy, a space that's seen a lot of growth, but also a lot of competition. They are a major player connecting businesses that need specific skills with freelancers who have them. A successful stock buyback demonstrates financial stability and management's belief in the company's long-term value. What we don't see in this specific filing are the detailed financials for the quarter, but this announcement about the buyback program gives us a strong hint about their financial strategy and confidence level. Typically, a company with strong positive cash flow and a healthy balance sheet is in a good position to initiate stock repurchases. In my view, this move by Upwork appears to be a strategic decision to enhance shareholder value and signal confidence in their future. It suggests they have enough financial flexibility to return capital to investors, while presumably still having plans for their core business operations. The lack of an expiration date also gives them the ability to adapt to changing market conditions, which is always a smart move. The real test will be how they execute this buyback and whether it translates into sustained share price appreciation and continued business growth for Upwork in the highly competitive freelance marketplace. Alright, that's our breakdown of Upwork's latest move. What's your take on this $100 million stock buyback and what it signals for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate finance and strategy. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.